Hello, and welcome to this introduction to the Fair Labor Standards Act. Section 7I Overtime Exemption. The Section 7I Overtime Exemption may apply to employees paid fully or partially on a commission basis who work in retail establishments such as supermarkets, department stores, clothing, home appliances, furniture stores, and the like. There are 3 requirements for an employee to be exempt from overtime under Section 7I. These are: 1. The employee must be employed by a retail or service establishment. 2. More than half of the employee's total earnings in a representative period must represent commissions on goods or services. And 3. The employee's total compensation in an overtime workweek, when divided by the total number of hours worked in the workweek, must exceed 1 1/2 times the minimum wage. Unless all 3 conditions are met, the Section 7I exemption is not applicable, and an employee must be paid overtime for hours worked over 40 in the workweek. It is not uncommon for hotels and restaurants located in major U.S. tourist destinations to include a compulsory service charge on customers' bills. This is because foreign tourists are often unfamiliar with U.S. tipping practices and will frequently leave few tips or no tips at all. The U.S. Department of Labor has long considered compulsory service charges imposed on customers not to be part of the server's tip income, but rather part of the employer's gross receipts. As such, service charges paid fully or partially to service employees are considered commissions. This is because service charges are keyed to sales since they bear a direct relationship to the goods and services that the establishment sells, and are a specific percentage of the bill presented to the customer. Therefore, if the 3 conditions previously mentioned are met, Section 7I will apply. There are benefits for employers and employees in implementing service charges and paying these as commissions to the service staff. Employers will benefit from 1. Reduced labor costs. If the Section 7I overtime exemption is found applicable, this will result in savings in overtime pay. The payment of commissions will also allow the employer to pay a reduced hourly rate or no hourly pay at all, since commissions are considered wages. The use of the Section 7I exemption will also permit the reduction of staff as the need for additional employees to avoid overtime hours is eliminated. 2. Reduced operational costs. Employers can deduct expenses like uniforms, cash shortages, walkouts, and breakage from commissioned employees, since the rate of pay for these employees is typically much greater than the minimum wage. Other benefits to employers include 3. Relief from the 80-20 rule, since, in most cases, the need to take a tip credit is eliminated. And finally 4. Employees are incentivized to sell more or upsell, since their commission earnings depend on the number of goods sold. Employees will also benefit from using the FLSA Section 7I exemption by 1. Protection from seasonal variations in sales in low or non-tipping customers, and 2. Increasing the earning potential for employees by allowing them to work more hours to increase their pay. For more information as to whether your business and employees qualify for the FLSA Section 7I exemption, please call or email us at the phone number or email shown.